We're here in Amsterdam at the Tobacco Theater with Crypto Economy event, and one of the speakers was Mr. Terpin. Could you please introduce yourself?
Hi, I'm Michael Terpin.
For the wider public, you're heading an investment fund, isn't it? Maybe Alphabit. Maybe you can tell something about it.
Sure. So I have a couple of hats. I'm a partner at the Alphabit fund. And it's called Alphabit because it's a hedge fund that it's alpha. In other words, what it's measured on is not the S&P like most hedge funds are for the stock market. It's the price of Bitcoin. So unlike a traditional venture fund where you start from zero, and if you're investing in cryptocurrency and you do nothing and it doubles, you'd get a 20% carry on that for doing nothing. With us, we have to beat the price of Bitcoin to get our carry.
All right. And you're regulated in the U.S. or?
No, actually, it's regulated in Dubai. Liam Robertson is the managing director out of Dubai and the U.K., and it's a Cayman's fund.
All right. And people, private investors or family offices or even institutional investors can, from which amount can they invest?
So it's 300 million under management. Cap for this fund, and they can invest with a minimum of 100,000.
100,000 US dollars.
Yes.
All right. And perhaps you can talk. You can say something about the allocation within the fund. Is it primarily focused on infrastructural tokens or also Bitcoin or?
So. It's a mix depending on market conditions, but in general, it's about maybe 10 or 15% of ICOs and new tokens. We, as one of the top funds, end up getting really good access to the top discounts from the top funds. So we'll get access to things that the average investor never gets a chance to see because they all go in private sale, and we'll oftentimes get 50 to 80% discounts because that's what they reserve for the top digital currency funds, because they know that we add a lot of value as well.
And in that way, it minimizes the risk of actually the investment itself. If you get 50 to 80% bonus.
Correct.
Yeah.
And the other thing also is that the other partners in the fund, we have a lot of just arbitrage between exchanges. So we've got a group out of India that's doing arbitrage between exchanges. Every day the money goes off the exchanges and goes back into cold storage. So we haven't had a penny hacked, and nor are we likely to. But there's sometimes huge discrepancies between price of Bitcoin, price of Ethereum, and different exchanges. The other thing also is just really closely following the market trends. I mean, we were literally 100% out of Bitcoin by the end of December. And cashing out at the top. So we have to mark to market to the how we perform against the price of Bitcoin. We're just now celebrating 12 months as a fund, and we have beaten the price of Bitcoin every one of those 12 months. And overall, it's been over double the return if you just put it in Bitcoin alone a year ago.
All right. Yeah, talking about Bitcoin, in your presentation you mentioned, I think it was 2021, 2022, Bitcoin will be like $50,000. Maybe you can elaborate on that.
So I've made some of these long calls before. I made the call at the start of 2014 when the price had dipped from 1,000 back down to 600, and it slid all the way back down to 150 briefly in January of 2015. I stuck with my call of $10,000 by 2020, and obviously I beat that by 2 years. It was 20,000 by the end of 2017. One of the most predictable things in the space has been how supply and demand responds to the halvings. So Bitcoin's supply is cut in half every 4 years. The first time that happened was November of 2012. The price of Bitcoin was $4. And by the December of the year after the halving, so December of 2013, the price had gone up 300x. Not 300%, 300 times. From $4 to around $1,200, depending on the exchange.
Yeah, it's amazing.
And same thing repeated itself with this last halving. You had the halving in July of 2016. Price was 630. And by the end of, not that December, but the next December, 2017, the price went up to $20,000. So it was roughly 30x. So 300x, 30x, I'm looking at having at least a 3x by the time you have the next halving going around. The next halving is 2 years from now. It's July of 2020. I expect that the price by then will probably be in the $15,000 to $25,000 range. So do a 3x on, say even 18,000. That gets you to your 50,000 by again the end of 2021.
And that's just a matter of scarcity, actually. I mean, we have now almost 80 million bitcoins mined, so still 3 to go. So
3 to go, and it's going to take 100 years to get to those 3.
100 years?
Yeah, it's 2140 is when the last Bitcoin goes. The last million take 100 years.
Wow.
So the first 10 million were 4 years. Because again, it's the economics of a halving. 10 million for the first 4 years, 5 million for the next 4 years, then 2.5 million, then 1.25, then 675, then on and on and on.
True. It's quite a smart algorithm, huh?
Well, I mentioned in my talk that in, I think it was 2014 or 2015, I was at a conference in London, and Raval Navakant, who started AngelList, said that it was the most brilliant pyramid scheme, not Ponzi scheme, pyramid scheme, where the early adopters, made the most money. But they had to be believers because there was no liquidity whatsoever for the first year and a half.
True. And since when are you investing in Bitcoin, actually?
So I started in early 2013. So I by my own self-definition, I'm not an old timer. An old timer had to be in there for the first halving.
All right.
So I missed that by a few months.
But you're blessed by Bitcoin, probably.
Yeah, I mean, I went to my first conference in May of 2013, and actually to launch a company. One of the things I do is I run Transform Group, which our PR division, Transform PR, has done about 80 ICOs. We're the top PR firm in the sector. And I saw the next internet. I mean, I basically saw that this was going to be as significant as when I went to the first internet world in 1994 and saw how that space was going to explode.
And do you still think we are in the pregame or first inning? Or?
I think we're in the early innings. I wouldn't say the first inning, but I think we certainly haven't hit the 7th inning stretch. So I would think, there have been a number of predictions just based on charts about where Bitcoin sort of tops out. As I mentioned before, 300x after the first halving, 30x after the second one. I think it's a prudent prediction that we may do 3x after the third halving and then 1.3x after the fourth halving and much smaller numbers afterwards because the market becomes more mature. When you're only having, a billion or even a $10 billion market cap, there's a lot more upside room to go than when it's a $1 trillion market cap or a $10 trillion market cap. You're just not going to go and take a $10 trillion asset class and quadruple it.
All right.
Right.
One of the central things in your presentation was also the infrastructure tokens. Actually, they become more valuable with the more users actually using them. Ethereum, EOS, Dash. You're quite bullish on them as well. Are they undervalued now at the moment?
Well, Dash is a payment token, not an infrastructure token. To me, an infrastructure token is one that other systems are built on top of. So I suppose Dash does have some apps built on top of it in terms of sort of using it as a payment, but to me it's more of a payment system. It's really, Dash's digital cash is there. We worked with them in the early days. And but with Ethereum, it's built to actually have other tokens be built on top of it that have their own life, right? And so EOS and NEM and NEO, if you look at the top 20 tokens, most of them are infrastructure tokens or payment tokens. And so when you have a token itself, I mean, it's dependent on when it's used. Like, say you've got, a payment token that takes off the next Angry Birds or something. We haven't even had that moment yet, by the way. That's why we're in the early innings. We haven't had the sort of must-have app, right?
CryptoKitties.
CryptoKitties, though, I mean, at its peak had 14,000 users. That's not exactly Pokemon Go. No, that's not Angry Birds, right? So, the App Store really took off when you had, I mean, look, even in the early days of mobile phones, Snake, as simple as it was still used by a lot of people, right? There hasn't been sort of a must-have, show your friends, you're not cool unless you have this app for cryptocurrency yet. And I think it's most likely going to be a game.
All right. We have lots of gaming ICOs, but just back on the infrastructural tokens. Do you think they're undervalued? Like, is Ethereum undervalued now? I mean,
well, typically the market says things are properly valued, but I would say over the long term, I would think that certain tokens are undervalued. You obviously can only tell that once they play out. If Ethereum is able to overcome its scaling issues, then it's undervalued. If it isn't, then it's overvalued. I think EOS is most likely undervalued. It seems to be really doing a lot of good things. I think that NEM and NEO are likely undervalued because, again, there's a lot of things that are being built on them. And if you look and see where are people building their applications on, obviously still a lot are being built initially on Ethereum, but sometimes that's just for the crowd sale.
True.
And then when you see more and more companies, once they get their crowd sale, then pivoting to Stellar or to Neo or to NEM or the EOS, that typically means then that they're going to simply take the Ethereum that they raised and sell it, and then generating their own token economics, which is supply and demand on a different platform, which will then use and require the underlying token.
Yeah, I don't know if you want to dive into that, but for instance, EOS got some criticism about their centralized model. There was some YouTube vloggers like Road to Ruda was actually very pushing on EOS. What do you think of that? Is that a reason perhaps to allocate less capital to EOS, or?
So we're moving from the days of decentralization being the main thing to tokenization being the main thing, because just like the internet, in the early days of the internet, I'm old enough to remember the early days of the internet, not like the early days of the internet, but the early days of the web, the early 90s, and in those Netscape, right, and in those days there were these people that called themselves the netizens, and they were sort of the self-appointed guardians of freedom on the internet, and they didn't want to have advertising. And anybody tried to put an ad on a website, they would go and blacklist them. And they said that the web needs to be free, should always be free, there should never be advertising. What are the biggest sites on the web today now? Facebook and Google and Amazon, right? So the purity of sort of the early adopters, if it's a viable business model, is usually compromised, for the better or worse, by the realities of the market. And I think that you're going to see fewer and fewer purely decentralized models. And I believe Facebook will have a token. And some people will hate it, but you're going to have a ready base built in of a couple of billion potential users. And you may have people say, ban Facebook token, don't use it, it's not decentralized. But the internet itself is relatively decentralized, but the stacks on top of it are not. And I think you're going to have, the kind of stacks that build the overall world of the blockchain. Bitcoin will remain decentralized, but you're going to have a number of them that are going to compete in the open market, right? You're going to have, even Ethereum is governed by a foundation, and the fact that they made a decision to roll back the blockchain after the DAO hack caused a fork. And Ethereum Classic technically is the original Ethereum. True. So these issues will come, but I think that if you're looking 10 years from now, we only have 20 million wallets out there, roughly. Yeah. And that's from a couple 100,000 when I got involved 5 years ago. So it's been a big growth, but it's still nowhere near where it needs to be. So 20 million is roughly the number of internet users that you had in 1994. Yep. By the time you got to 2000, 6 years later, you had 500 million. Because of mobile phone adoption, because of all these other things that contributed to growing the market. Right. And I think you're going to see a similar thing, and I think the telcos are going to be a big part of it. If you have a couple of big telcos, once you have a couple of must-have dApps, or just maybe not even be decentralized. Maybe they're centralized, but they're tokenized. Maybe they'll become taps instead of dApps, right? But you have tokens that people want to play, right? So you have the tokenized version of a Candy Crush or of an Angry Birds, and people get to win cash prizes. They get to win. If it's a game of skill in most jurisdictions, it's not considered gaming. So I think that you're going to have a lot of these win loyalty points and win cash where it's legal coming out in the next wave, and they're going to be very popular. I mean, look,
logical step.
Mafia Wars is what really grew Facebook. In Farmville, right? So you're going to have the app version of whatever works well with this world. It may be an existing brand that decides to tokenize. I think that's most likely, or it may be a brand new one that's just really built for the blockchain.
So actually, if you see at this ecosystem, it will be an extra layer around the internet e-commerce layer we already have.
I think it's really not even a layer at this point. It's sort of like an alternative, right? So in other words, if you're using, let's say there's an Angry Birds token, or let's say there's a Candy Crush token. I'm working and advising a company that's going to start something called Jewels as a token. So it's going to be their own brand. And it's going to be, something that is, you're going out and mining for jewels, and it's similar gameplay to the types of tokens, or the types of non-tokenized games that are already out there. But you're able to go and earn tokens, and you'll get a certain number of tokens for signing up, etc. And so when those become popular, you then go to a telco. I think this is a key to growth. And if a year from now you turn on your television and you see an ad broadcast across Europe, across the U.S., across Asia, wherever, and it says something to the effect of, switch to T-Mobile and get $250 or 250 euros of blockchain apps free, people will say, I'm going to switch to T-Mobile for that. And they can make deals with the top app producers. And I see this as the inevitable future. And here's the cool thing. When your phone company is your exchange, and you're mainly just buying and not selling because you need the tokens to play the games, the price of those tokens should go up because you're buying and not selling. Right? And you don't need extra KYC if it's your phone provider. They already have it. They know who you are. So there are logical exchanges. So
you foresee a bigger role for telcos in this crypto economy, actually?
I think that the ones that jump in will be handsomely rewarded, and I think they either need to buy an exchange, partner with an exchange, become an exchange, and they could look 20 million current wallets. How many users of T-Mobile? How many users of Vodafone?
They already got the users.
They got right. They've got hundreds of millions. So I mean, to me, that's a no-brainer.
All right. To conclude, I mean, perhaps you have a few ICOs you're quite bullish on. You invest in them probably, and maybe one or two you want to mention as a conclusion.
Okay.
And why?
Well, let's see. So I'm kind of on the road right now. I'm on a 45-day road trip, obviously speaking here today. I'm going to be in London next week at Token Match, which is July 12th, which is an investor group, investor conference that I put on with Lydian's Capital. Okay. And then a week after that, I'm going to be at Malta for the second Coin Agenda Europe. We were in Barcelona last year. And and so a couple of the tokens that are presenting at both of them are also ones that I'm advising, and so I like a couple of the ones. I hate picking favorites, but one that just won the best of show at the Coin Agenda Asia conference is called Sports Fix. Yeah. And so sports is actually an interesting category. There's another token called Sportscaster that I'm also working with. Do different things, right? The one is actually Sportscaster has got former NBA commissioner as an advisor, David Stern, and so they're really letting you be a sportscaster. And then Sports Fix is really looking at underserved markets, primarily in Southeast Asia, and really buying up the rights from the teams to be able to broadcast. So there's a number of different things in sports and in video. I'm an advisor to the very successful, recently concluded offering of a video coin, and they raised $50 million, and they're getting ready to sort of get on the market. I mean, that's sort of the interesting and treacherous times right now, is the transition in a down market to when you've had a successful ICO and then getting listed. And I think that there's a lot of good tokens out there that you can now buy below their ICO price, and if you're a long-term believer, you should do that.
And if you look at what are the decisive factors for you to invest in ICO, you have the team, technology, of course, market, but I mean,
yeah, I think it's all the above, and it's also the safety in numbers. A lot of times, if I've heard that 3 or 4 other top funds have invested, we'll invest, because we know that they've got sort of the. I mean, usually it's not an accident that we all tend to move in a pack.
Like the Novogratz fund, or
yeah. So we've co-invested in a number of deals with Galaxy, Pantera. I mean, it's just like, Wax is one of them. I was an advisor to Wax. They raised $70 million. The first round raised $24 million in like a week.
It's called Wax?
Wax, WAX, Worldwide Asset Exchange. Okay. And that's a good example. They went out on Ethereum. They're now pivoting to EOS. They went out at, I think, about 25 cents. They then dipped in the crash to like about 9 cents. Now they're up like double digits every day, because people are going, oh, wow, I can get in lower than the ICO price right now.
Last question. Actually, do you meet Mike Novogratz and the guys from Pantera Capital, and you discuss actually the market, and especially in the bearish market? I mean, you're quite a decisive factor to put the market up, actually, I think.
I mean, we're all at the same conferences. I mean, we don't have like secret meetings or anything like that. But usually when we meet each other, it's when we're at conferences or when we're discussing a deal. But yeah, we're all in the same. We're all in the same circuit.
All right.
We're all traveling around Asia and Europe.
But can you actually manipulate between brackets the Bitcoin chart, or is it?
I mean, first of all, this is a non-securities market, so is the price of fine wine and art and manipulated? It's hard to say. I mean, when more people are buying, and the price will go up. When more people are selling, the price will go down. I don't think there's any secret cabals determining anything. I do think that sometimes people, will decide to dump because they don't like something, and they'll decide to, but it's an early market. Right now, the regulation has been as commodities for utility tokens, and the biggest question has been, really, what constitutes a security versus a utility token, and I think they're also looking at the exchanges themselves, because I think the accusations have sometimes been that certain exchanges have been guilty of manipulation themselves. Individual traders, they really don't care about as much, right? I mean, if an individual trader comes in and buys a whole bunch of tokens and the price goes up and then they sell them, it's a unregulated commodity. There's nothing illegal about that. If an exchange does it, then they're breaking the law.
Yeah. And what is the decisive factor to become this space, this tiny crypto economy space, to the masses? Is it regulation, or?
I think it's adoption. I think that if you've got, it's a few things, right? I mean, I think it's for the big money, it's custody. In other words, if somebody wants to go and put $50 million in, they have to make sure that there's no chance it's going to get hacked. Yes. They want to know that there's some kind of like equivalent of like FDIC insurance, and that's what custody is about. I mean, ItBit is a token, is an exchange that is offering custody. There's a few other ones. They'll charge whatever 0.5% to 1% of your holdings to make sure that they can't be hacked, because they're in cold storage and multiple locations. Armed guards, takes 3 days to move it. And so that's the only way that's really 100% safe right now, is to have that kind of redundancy, so that nobody can go and trick the person. And so custody for larger investors is a big issue, and then just safety in numbers again, sort of the adoption effect of when there was $1 million or $1 billion asset class, it's not very interesting to larger investors, and it's really not even that well known from smaller investors. When it got up to 800 billion, it was approaching $1 trillion. That's when you had a big frenzy, and I think we'll certainly see those days again.
All right. Thank you very much, Mr. Terpin, and all the best on your travelings.
Thank you.
Yes.